Hello traders, Akil here with this week's live ratio room review. As you can tell, I'm a little excited. It's Tuesday, August the 7th, and we just came off a busy day in the live room. In fact, probably the biggest day or the busiest day we've ever had. We had about 7 trades triggered today. Ended up with 5 winners, 1 loss, and 1 break even for a little under 120 pips, depending on when you got out. Some traders may still be involved in this trade. I make sure, as far as day trades go, to close out my position before the day ends, so I'm all flat in the market as of now. But I want to go over one trade that we did have, which is a great example of a trade where I say you got to take the trade when the money is on the table. And what I mean by that is, my mentor Jason Stapleton always taught me that we can take trades any direction, any time of the day, any chart, but it's more important to take the trades where the market is just asking you to get involved so you can win. And we had a perfect example of that on, I believe it was Euro Dollar 60 minute. Now here's what we had earlier in the morning. When I was doing my pre-market analysis, I noticed that we had triple tops here on the Euro Dollar. 1, 2, 3, and we may have just been coming up. Yep, by the time the live room opened, we were just retesting this triple top right here. Now when we came down to the 5-minute chart, if I can find it, here we go. 5-minute chart, here's what else we noticed. Not only do we have an triple top highs, we also had an ABCD pattern completing at that same level, and that ABCD pattern was also a part of an advanced pattern, in this case being a butterfly pattern. So again, we had triple top highs, we had Fibonacci confluence up there, we had an ABCD pattern, and we had an advanced pattern. Basically, the market begging us to take this trade. So you know what we did? We took the trade, and we shot right back down, hitting target ones for a few pips. You can see the market did retrace, stopping us back out for break even, or at least stopping me out for break even before rolling back down. But you know what? I'm fine with target ones. Again, a winning trade doesn't lose money, and as long as I can conserve my losses, I'm okay. The market also told us that we made the right call. As you can see, it rolled over, which builds confidence for the next time we get this set up. And even if traders didn't take this trade, seeing this in live action gives them confidence in their technical analysis, and the next time it happens, they'll remember it and be able to get involved. Here's where I first entered on Euro Yen, and right now I'm on an 8 range bar chart, which is a chart I like to use for a lot of structure and Fibonacci based trades, just because it's a little easier to read. But here's the level I was looking at first. If I take from this swing low, excuse me, to this swing high, and trust me, it looked a little better in real time, copy and paste that, we'll see that we have an ABCD completion right here around 96.67. I'll draw a line in there. I could then take a Fibonacci extension from swing low to swing high and back. You'll see that we have a 1618 Fibonacci extension meeting right at that ABCD completion level. Then, just to put some icing on the cake, take a Fibonacci retracement from this middle impulse leg. We'll see we have a 618 retracement in the zone, and if I take one more Fibonacci retracement from our entire swing, you'll see we have a 382. So all in all, we have 2 Fibonacci retracements, a Fibonacci extension, an ABC pattern, and if I look left, an area of structure. One of those trades where, as I mentioned before, the money is right on the table, waiting to be grabbed. Now, as you can see, we got involved in this trade. Market consolidated, bounced a little back and forth, and although this seems small in the range bar, this was actually between around 8:45 in the morning to about 9:30, so a good 45 minutes in here, and then finally spiking up and taking us out. Now during the room, what I mentioned to traders was the next level I would be looking for would be this level right here, around this 618. And originally I had stops above this level. I moved them down once we did get the double top. But what I told the traders in the room was, if we get past this level, if we break above and get stopped out, then I'll be looking to short again at this level. And if I bring my red line up, we'll see that, zoom in left, we're coming right back in a little higher. There we go. We're coming right back in. Get back down there. Coming right back into another structure level, as well as a 618 retracement. There's a 707 up there. If I bring a Fibonacci extension in, we'll probably have a 127 as well. Yep, a 127 right in the zone. And as you can see, the market got up to this zone, rolled right back down about another 35 pips, it looks like. And of course, traders, your targets probably should be around here, a retest of these lows, if not a full extension to this 127. So I'm doing this live right now, so I don't know how this trade is going to fare out. Again, I'm not in it, but it's something that we did look at in the room. But if this rolls over to win, even if it just hits target one, the first target on this winning trade makes up for the loss you took on the losing trade. And again, using that risk reward and using that win ratio and positive expectancy, that's how you keep your months profitable in trading. But the key is you got to take every trade. There's been sort of an ongoing joke by some of the room members of calling Fridays Freaky Friday. I believe it started probably on a non-farms payroll day or some day with a big news announcement. But every once in a while, you'll see that on Fridays the market has some, I guess, wild type of movements. Well, today we actually had one of those days. Fortunately, we were able to catch a few trades, some painful, some unpainful. But either way, gave some really good lessons on trading discipline and trading psychology. We'll start with dollar CAD. Here was basically a pain-free trade. We called a butterfly, and the market made. I'm on a 15-minute chart. We were actually looking at it on the 5-minute chart, and the market just made a straight move up, and I actually missed the original entry. What ended up happening is the market. You can even see the gap from my data, but imagine there's a big green candle here that just shot all the way up and then kind of retest. We got involved on the retest and basically ran over pretty pain-free to target 1 and 2. So that was a pretty exciting way to start the day. On the other hand, we had a trade on pound dollar that had a few different circumstances. There was a double bottom I called, which I actually didn't end up getting involved with. I was going on a rant about something in the market, and we had a bigger candle that retraced a little further than what I wanted to get inside the market at, so I took a pass. In hindsight, looks like I made the wrong decision. As you can see, the market shoot straight up, getting a few of the traders in the room target 1 and target 2 profits hit, which was pretty cool. I then took a cipher pattern right off of this double bottom, and you can see that it basically got stopped out immediately. And if I'm in a trade that's a losing trade, these are the ones I want to be in. I don't like the fighting back and forth and the market taking me 10 pips in profit, 20 pips in drawdown, 30 pips in profit, 30 pips in drawdown. If I'm going to lose, I'd rather be stopped out right away, and that's what happened. These arrows on here, as you're probably wondering, we were just talking about some different possibilities for target profits and ideas on how to play this. Now, our big winner for the day was, if I can find it, pound yen, and this was actually the most painful trade of the day. As you can see in blue, we had a Gartley pattern complete, and get rid of some of these lines is probably explaining something. We had a Gartley pattern that completed right around here, 122.16, and this was actually before I was awake, 3:30, so I was fast asleep. But what I said to the room was, if we come back and get a double bottom at this area with RSI divergence, then that gives me another shot to get involved in this pattern. As you see, we got the double bottom, a beautiful candle reached down and wicked all the way back up, and then as soon as I get involved, or as soon as we got involved in the room, boom, market goes straight down, Now, luckily for us, we're pretty experienced with where to put stops, and we make sure to put them in an area where the market can do this type of movement, can test out these stop losses, and still leave us safe. And as I remember my mentor Jason saying, this is what the market wants to do. The market knows that a lot of rookie traders are hiding stops right below these lows. So if we're at 21.89, they're probably hiding them right at 21.80. That's a nice round number. That sounds good. Let me put it 10 pips down. And you can see the market reached right down there, grabbed up all the rookie trader stops before shooting back up, giving us some pretty nice profit. Now I'm still actually holding this position over the weekend. I told the room if we got up here into the 23 flats, I'd take off my second targets a little earlier. I'm actually looking for a retest of 123.18, but we're still about 50 pips away from that, about 30 pips away from that. So I decided to hold over the weekend on my trail stops and see if I can get the full target 2 profit when we get back. But again, pretty good to experience something like this in the room, because there's a lot of fear that goes into a move like this. You know, when the market comes down here, it's painful for traders, and the first thing they want to do is jump ship. Even at this point, where the market officially or technically broke and closed below our X leg, I told the traders in the room, hey, this trade is most likely going to be a loser, and if you want to play a graceful exit strategy, which we use, or I don't personally use, but which we talked about, you can see if the market retraces and take your stops out at break even and just call it a day. But again, having that discipline, having a bunch of traders in the room that have the same mindset, I think it makes it easier for those in this trade to really stick to their guns, sit through this pain, knowing that I'm in this trade and they're watching my money be sucked up in real life as well. But you can see the ones that did hang in, the ones that did have smart stops, it paid off, and it paid off pretty big. Lastly, before I get out of here for the week, I want to talk about 2 syndicate trades. One I called, I think Monday, it was talking about Euro Pound. We talked about this structure level right here. You can see the market, just ignore this junk, but you can see the market came right into the 79.50 area and has rolled over about 130 pips. Since then, I'll probably do a video maybe sometime next week talking about extended targets for this pair for those who are interested. And Jason also put up a post talking about the euro dollar and a 26.18 opportunity we had here on the hourly chart, which immediately rolled over pretty nicely and made some good profit for those traders. Just want to let you guys know that I do have a new website, ratiotradingmentor.com. So if you have some free time this weekend, check it out. All right, take care, traders.